Welcome to Brickwork Ratings Knowledge Library. In this video, we will be learning about small finance banks. What are small finance banks? Small finance banks, like commercial banks, are focused towards unserved and unbanked parts of the country, performing all the basic banking operations. Unlike Payments Bank, they include accepting deposits and lendings as well. 9 small finance banks operate in India are Ujjivan Small Finance Bank, Janalakshmi Small Finance Bank, Equitas, AU Small Finance Bank, Capital Small Finance Bank, ESAF, Utkarsh Small Finance Bank, Suryoday Small Finance Bank, and Fincare Small Finance Bank. Inception of small finance banks in India. Small finance banks and payments bank are included in the category of differentiated banks, whose idea was first proposed in 2007 and principal approvals were granted in July 2014 for setting up small finance banks. Small finance banks were brought in to provide banking services to the rural and semi-urban areas with the main motive to help the small business units, farmers, MSMEs, and many other unorganized small sector entities. What are the restrictions of small finance banks as compared to traditional banks? Minimum Rs 200 crore of paid up capital unless converted from UCBs. Promoters are required to hold 40% of paid up capital for a period of 5 years from the commencement of the bank. Open at least 25% of branches in rural areas. A single or group of obligors can only be granted a maximum loan amount and investment limit of 10% and 15% of its capital funds respectively. Now let's take a look at comparison between requirements for deposits, lending and investments between commercial banks, payments bank and small finance banks as presented in our previous videos. Compared to commercial banks, in the case of deposits, payments bank have up to 1 lakh per account, small finance banks have no restriction and neobanks cannot accept deposits in their own books. Whereas coming to lending, payments bank are not allowed to lend. Small finance banks have a maximum of 10% of capital fund to a single person and neobanks cannot offer lending products on their own books. Finally, coming to the case of investments, payments bank are required to invest 75% of demand deposits by investing in government securities. Small finance banks are required to maintain CRR and SLR as per the regulations of RBI and neobanks depends mostly on the partner banks. Hope you got to learn more about functioning of different types of banks in India. Do like, share and subscribe to Brickwork Ratings channel. Thank you.